Hello traders, so welcome to the final chapter. How do you feel? I hope you have learned a lot. In this chapter actually you're going to learn how to develop your trading plan, and this trading plan is the one you're going to be using now to formulate trade setups and manage your trades. We are actually going to learn everything that you need in order to develop your trading plan, and at the end of this lecture this chapter, we're going to learn an example of a trading plan. I'm going to show you just an example of a trading plan and how it should look like, and how you can now, from that example, you can develop your own. But before that, let's dig into some concepts that will assist us in developing our trading plan. So the first thing we're going to be looking at is how you're going to define your trading style. So you're going to look at exactly in this lesson how you can define your trading style, which will now aid you in even defining or developing your trading plan. So based on your trading style, you'll have a different trading plan. So just keep that in mind as we begin this final chapter. So we have 5 types of trading styles. So the first trading style is position trading. So this is actually a bit more longer term. So you're going to see more details about position trading just in the next slides. We have swing trading, and then we have short-term trading, which is somewhere in between longer term and shorter term trading. Then we have day trading. This is actually trying to catch a setup within a day, within a specific day. Then we have scalping, which now you catch a setup even within the day without really necessarily ending the day in any setups. So what are the factors that affect trading style selection? So the first thing is personality. This is actually one of the most crucial factors. Personality involves your level of patience. How long can you wait for a setup to form? How long can you wait for a setup to fulfill once you have executed? This is very crucial. You have to really think about this before you select your trading style, because this will impact how your trades perform. Because if you are not quite patient and you're trying to trade a longer time style, then it means you'll interfere with that setup. It will not even come to fruition, because if you are engaging in a longer term setup and you are not very patient, then it means you'll interfere with that setup and it will not go in your favor. The second thing you want to be considering is your lifestyle. When I say availability of time in your schedule, what I mean is that are you doing this? When I say this, I mean trading. Are you doing it full time or part time? If you're doing it part time, probably maybe you're in some other commitment, maybe you're in a job or a business. So if you're a part-time trader, it means your selection should allow for that flexibility of time. If you're a full-time trader, then you have all the time now to consider that you can trade even styles that allow for you to be more engaged in the market. So let's look at the first one, which is position trading. So I'm just going to go through these elements, that more or less the same. So the trader profile is that the personality, you're extremely patient and you find no interest in short-term or intraday risk. So you have no interest. So this is more of an investment mentality. You're looking at 6 or more months of just holding a trade. You have a smartphone for instant updates or even order entries and stop management, and then you can also get price alerts, because if you are holding for a long time, then you just be using price alerts frequently to allow you to know when certain things have happened in the market. Either stop loss has been hit, a target has been hit, certain highs have been taken out that you find significant in the markets, for you now to go back into your charts and look at, maybe make a decision on the setup or the trade you're holding, such things. So the optimal model is that you'll be doing position trading which will last between 3 weeks to several months in duration. The time available is open to market conditions, meaning there's no fixed time that you're looking at in terms of maybe the sessions that we mentioned. But the session of focus, when I say London or New York, I mean maybe the session you're looking to position yourself to enter a trade. That is when the session will become important. And then the trade objective, you're looking at 500 plus pips on average, meaning that also your stop loss will be a bit wider if you're considering a position trade. You could be looking at a stop loss of maybe even 100 pips or so. Trade frequency is about 2 to 3 times per year. So as you can see, this is not really suitable for everyone. And the trading day focus is any day of the week, because you're looking at a point in the market. For example, maybe the weekly chart is coming down into its imbalance and you want to position yourself there inside that imbalance and hold for several weeks or months. Just note that these conditions that I've outlined here change significantly, or may change significantly depending on your trading style of choice. So let's look at the second style so that you can see how they vary significantly depending on how far you are in terms of even the time frame selection. So swing trading. So in swing trading is just a little bit closer to the position trading, but in terms of time it reduces in terms of duration. So your personality is very patient. You find no time in short term or intraday risk. So when I say find no time in short term, meaning maybe you're engaged in this is more of the lifestyle aspect. Patience is more of the personality aspect. So if you are finding no time in short term or intraday risk, or intraday trading rather, then it means swing trading will be good for you, or position trading if you are really, really engaged, or your mentality is just an investment mentality. But swing trading is more of the in between the investment mindset and the short term to longer term perspective. So you can get instant notification of price. The optimal model actually here is that you're swing trading and you're holding between 1 to 3 weeks in duration. So your trades, you could be holding between either 1 to 3 weeks in duration. The time available is still open to market conditions, and the session you're focusing on is still London and New York sessions. And your trade objectives is between 100 to 300 pips on average. Your trade frequency now is between 1 to 2 times per month. So you're seeing the frequency has increased compared to position trading, but it is still low if you're comparing with a person that maybe engages in day trading. Trading days of focus is any day of the week. So any day of the week that the market fulfills or comes into either an order block or a fair value gap, or takes out liquidity and you're seeing opportunities to enter that position, then you're good to go. Short-term trading is the in-between trading style. Personality is short on patience, but not very patient. But you're finding no comfort in long-term or intraday risk still. So your short-term trades will be between 1 to 3 days in duration. So the duration has reduced significantly. And the time available is still open to market conditions. The session of focus I've outlined here is London Open. So you're looking for mostly the low of the week or high of the week, depending on whether you're bullish or bearish. The trade objective is 50 to 100 pips on average, and your trade frequency is between 1 to 2 times per week. And your trading days of focus for very high probability setups is Tuesday, Wednesday, and Thursday. Now, day trading. Day trading is for those that are impatient and they find time in short-term intraday risk. So for a day trader, you're trying to find a setup within maybe a day's range. So the trader still can get instant notifications for order entries and stop management and price alerts for significant levels in the market. So the optimal model is that you're trying to catch an intraday trade between 1 to 5 hours in duration, Your time of focus is open to market conditions still, so you're not fixed with time, but you're still focusing on the session of London and New York sessions only. Then the trade objectives is 40 to 50 pips on average. Your trade frequency is three times per week, and then your days of focus is Monday, Tuesday, Wednesday, and sometimes Thursday, because Thursday could be sometimes a reversal. But if you have not met the weekly objective, then Thursday may offer some setups. Finally, scalping. So scalping is for those with very short attention spans and they have no patience for the market to form and deliver over a long time, even within a day, or the way we have looked at day trading, even up to 5 hours sometimes. So they find no comfort in long-term or overnight risk. So you still have a smartphone for instant updates and order entry and management and price alerts for significant levels. So your optimal model is scalping intraday between 1 to 3 hours in duration. So you're finding setups that last between 1 to 3 hours in duration. The time available, now this is very specific, it's between 2 a.m. to 5 a.m. that is London session, and 7 a.m. to 10 a.m. which is New York session. So you're still focusing on the London and New York sessions. And your trade objectives, this is very important, is between 15 to 20 pips on average. Your trade frequency is between 2 to 3 times per week, because you're trying to find high probability scalps. So you're focusing on those scalps that are really high probability. You're not just going in there and hammering every setup. Your trading days of focus is Monday, Tuesday, Wednesday, and potentially Thursday. So that is it, guys. These are the 5 trading styles. So you want to really find yourself and figure out which type of trader you are before you even start developing your trading plan. So just as a guideline, we have the time frames that you may want to look at depending on which type of trader you will find yourself to be. So just be mindful that these are just time frame guidelines and they're not fixed. So these are just my recommendation, but I will recommend that you use at least 3 time frames in your trading. So for position trader, you want to be looking at the monthly, the weekly, and now you use the daily chart for execution. So if you find either of the 2 entry patterns that we discussed forming when maybe the monthly or the weekly order block of fair value gap or even liquidity is taken out, if you see that entry pattern in the daily chart, that is your time frame of execution. So you execute in the daily chart, use stops in the daily chart. That's why you're saying stops might sometimes even go to 100 plus pips, because you're using the daily chart to execute. For swing traders, you will be using the weekly, the daily, and the 4-hour chart for execution. Short-term traders, you'll use the weekly, the daily, that is for direction, then the 1-hour chart for execution. Then the day traders, you use the daily chart, the 4-hour. Now the 15 minutes is the main execution, but 5 minutes you can use it to fine-tune your entries even more. Scalpers focus on the 4-hour, 15 minutes. You can use the 1 hour in there, but I've not mentioned here because you can drop from the 4 hour to the 15 minutes, then you find 5 minutes and 1 minute for execution. So 1 hour is also good to check maybe for imbalances or fair value gaps on order blocks for you to find more setups. Like I've said, it's at least 3 time frames, so you're not limited to, but don't overuse time frames of course, but you're not limited to even use 4 or 5 time frames. But the best I've found is at least 3 time frames in your trading. So finally, as an exercise, you want to go into your charts and use at least 3 time frames in your analysis and trading. This comes after now, first of all, identifying your preferred trading style based on your personality and lifestyle. So the first thing you want to do is identify which type of trader are you. After you identify that, then you can use the recommended time frames and any other time frame that will suit you. You'll just have to do the process for some time, and then you'll come and just realize which time frames you'll prefer. But the recommended ones are the bare minimum. So thank you so much for watching. See you in the next lesson.